From Ray and Associates Remote Studio, this is Unsuitable, a management and financial services podcast for entrepreneurs, tenured business leaders, and others who are ready to look beyond the suit and tie culture for meaningful, measurable results. I'm Doug Hauser. On this weekly podcast, thought leaders and business professionals break down complicated and mundane topics and give you the tips and insight you actually need to grow as a leader and help your organization thrive. If you haven't already, hit the subscribe button so you don't miss future episodes. And if you want access to even more information, show notes, and exclusive content, visit our website at www.raycpa.com/podcast and sign up for updates. I firmly believe that there is an opportunity in every challenge. These days, of course, there are challenges at every turn. So that means that opportunities should be everywhere too, right? Today's guest is here to talk to us about turning lemons into lemonade, at least from a tax planning perspective. It's no longer business as usual. Things are constantly changing, especially the CARES Act and other legislation related to the coronavirus. And businesses are strapped for cash, but none of these challenges should get in the way of tax planning for your business. In fact, tax planning is now more important than ever. Cindy's here today to talk about how COVID-19 may impact your tax liability, and she's also going to break down some of the new legislation to come out of this situation and how the proper tax planning can help minimize your tax liability. So welcome to Unsuitable, Cindy. Again, love to have you on as always.
Thanks, Doug. It's been an interesting economic reality, so
No kidding. And we seem to get changes every day. I know I've been myself immersed in all the various loan programs that are available to help businesses and individuals out there. And we continue to see new IRS rulings, it seems like all the time, just related to that. So I can't even imagine what you're seeing right now as a tax expert with regard to the CARES Act and some of the changes there. And talk to us a little bit about some of the biggest items within the CARES Act from a tax perspective.
Now, one thing I do realize is that, like the government, business owners have to be reactionary and do it quickly. Mm-hmm. And I think, the Ray associates that we have in our team have done a great job keeping up with this, and not one person can do it. And I think that that's key to remember. So we have PPP loans. We have a lot of things out there that are, pretty much specific, and the knowledge is specific. And I think that it's important to reach out to each respective members. So business survival is going to be key. And I think monitor cash flow is also key. And I think that when it comes to cash flow, I think that even with the PPP loans, small businesses were required to give information they don't normally prepare.
Good point.
So, they were given the opportunity to, or the challenge, whatever you want to call it, to provide this information to SBA, to the banks or whatever. And so now they at least have some framework to move forward. And just because it's business as usual, when people review their business plans, it's really not something that, some of them might realize that they can't survive.
Right.
Okay. And so then they have to do another turn. They have to revamp their business plan and go forward. And the other thing that's out there too is the 2020 presidential election. Mm. And usually in an election year, public policy gears towards taxes. And right now, I don't know what the election's going to prove. Right. They're paying attention to the 2020 campaign, and they're wondering, they like the 2017 tax law, small businesses.
Sure.
So they're wondering where this is all going to end up. So once again, COVID-19 had several legislation and regulatory tax measures that were undertaken. Mm-hmm. When you guys first invited me, I had the Secure Act out there, and that was it.
Right.
It was kind of interesting, it was, pretty, subtle, and it was something to look at. But now with COVID-19, several acts and regulations came in very quickly.
Yep.
Okay. One of the probably benefit for both a tax preparer and the small businesses is the delay in the filing of tax returns.
Yep.
I think that giving extensions and till July 15th for the individual owners has really made it, a little bit more easier to handle while dealing with all the other things that have been requested.
Yeah.
So, under if we go back to the Secure Act, they were trying to be a revenue generator for the government.
Right.
They did a lot of things that at the individual level were going to increase taxes. Okay. But
Yep.
they were also making it easier for retirement plans setups. They were getting more credits for retirement plans because they were encouraging savings.
Yep.
So some of the Secure Act applications are not really going to be relevant right now because people are taking money out of the retirement plans to fund their businesses. So when I go through the Secure Act, I'm thinking, well, this is going to be put on the wayside.
Right.
Will they rethink RMDs, and will they rethink the stretch IRA provisions? Right now, there's so much out there. And we have to realize that anything that affects small businesses are also impacted by the individual provisions.
Absolutely.
Because most small businesses are pass-through entities, and we want to try to minimize the taxes at both levels, individual and the small business.
If I'm a business owner, right, it's just, my gosh, this seems overly complex. I'm worried. I'm in crisis mode right now. I'm not thinking beyond the next, month or 2 months or maybe 3 months. So I think the thing we try to do, right, is to counsel clients to think not only short term, but let's think about longer term. Let's think about next year, the year after as well. Is that fair to say?
It is fair to say, and I think that we have to get them. Just like, when I'm looking at my portfolio, I don't want to look at it at what it is today. I was in there for the long term. Okay, so I'm going to look at it, and probably not look at it given the situation. But once again, businesses have to do that too. But I think that if a business realizes that they can't survive, whether it's the product they're selling or, the service they're providing, that, they should rethink a business plan. Yeah. And it may be a good time to just look through and get some of the key leaders in the company to say, what can we do different? Can we survive this? And I think COVID-19 actually is giving us that, opportunity to be survivors. Mm-hmm. And I think that, the government is helping along the way, but once again, everything was reactionary. It wasn't a thought out process. It was everybody had to react and get that money back into the economy.
Right.
So I think overall, whether we have the PPP loans or we have employment credits or deferrals of employment taxes, those are all things that they should be looking at to take advantage of it.
Right. Yeah. And I think from a business perspective, as you said, there are so many opportunities out there for them to evaluate these different things, and they're not necessarily all mutually exclusive. Some of them are. In other words, if you can't, if you do have taken a PPP loan, for example, then employee retention tax credits are, not allowable. But there certainly are things that aren't mutually exclusive, right, that you should think about in terms of planning.
Right. And I know that the Secure Act provided the larger credit for new employment plans or retirement plans, only because I think they wanted people to start saving. But, are people really going to be doing that? Given the economic situation, are they really going to be able to do that? Are the employment credits or the retirement small business credit going to be as valuable as they thought it was under the Secure Act? I think savings for the future, saving for retirement is important for individuals, but the businesses also have to realize that, is that going to be a priority for them?
Yep. Absolutely.
So, there's a lot of things out there. But once again, what happened with the COVID acts, whether it was the CARES Act or the Family Act that they did, or the additional regulations that they put into place, they have to realize that, it did a lot of things that helped us. They provide technical corrections for something that happened back at the end of 17. So I think that overall, they realized that things needed to get done. And, businesses can now go back and look at, how did I depreciate, property that I can now depreciate in a different manner to get a bigger deduction? And is it worth that savings? So I think that, a lot of things that happened under the CARES Act actually was able to clarify. Once again, it might have been reactionary, but it got a lot of things out there that were questionable.
One of the big things I know I've heard, and we've dealt with clients on this already, are the NOL carryback rules, right? And there's some significant benefits to potentially be had there. Can you give us
Correct.
an overview?
Yeah, and under the Tax Cuts and Jobs Act, they wanted, once again, as a revenue generator. So they were trying to change things like NOLs and business losses. So they put limitations on those, and they actually said, from now on, going forward, your NOLs are only carried forward, not carried back. So once again, they said, okay, well, can we generate more, cash flow for small businesses if we change that? And they did. They says now we can go back 5 years for losses that are generated. And once again, this is going back and, as a preparer, we're searching our databases for eligible clients. And once again, pass-through entities, not only are you amending the business returns, you're also amending the individual returns.
Right.
So now you have, more of an opportunity there.
Yeah. And in some cases, obviously that can be significant, and at least you're, taking advantage of the situation now where cash flow and liquidity are of the utmost importance. So
correct.
If you can recapture some of that, it's well worthwhile.
And that's what the CARES Act really did, is can we capture some cash flow? What can we do to help small businesses do that? In addition to the PPP loans, can we, and it's not that, that it's a very difficult thing to do, but we can reevaluate what was done for 17 and 18 and see if we can actually, make it better for the clients and increase their cash flow.
Yeah.
They also looked at, limitations on business interests. So they imposed a lot of limitations on the business owners. And, once again, that is something that, we are looking through. More business interest is deductible now. They raised the limit from 30 to 50%. So once again, we have to look at that and take advantage of those kind of situations.
Yeah. Now let's talk a little bit specifically related to the CARES Act. There's been a lot of discussion around the PPP loans and all that, again, which I've been heavily immersed in. The CARES Act allows for that forgiven loan amount to not be included as taxable income, which was nice and very different, obviously, from any normal loan that's forgiven. However, the IRS has also clarified recently that those related expenses are not deductible for tax purposes, which makes this kind of a tax neutral thing. It's like, well, what was the point of that? So what are your thoughts there? Will we see some, hopefully some guidance or change around that? What do you think?
I think we will. I think we have enough trade organizations like the AICPA, the Ohio Society of CPAs, and the professionals saying, hey, is this really supposed to be tax neutral? Is it supposed to be forgiveness?
Yeah.
And I think that when it originally came out, I was in a few webinars where, people like lawyers were saying it will be allowed as a carryback, which is going to help your cash flow.
Right.
Okay. Even though it's supposed to, for small businesses, it does increase your basis, they're saying, even though it's forgiven. But once again, I think that we're going to see enough professional push to eventually make it available as a deduction also, the expenses paid using the forgivable loan. But that's just a personal opinion. I can't say for sure because right now it's not.
Right.
And I agree with you. You're making it tax neutral, so it's really not forgivable.
Right.
It just didn't make sense to me.
It's nice to get the certainly the cash in hand, but you've essentially reduced the value of that by upwards of perhaps 34%, right?
Correct.
If you do that. So it's like, well, wait a minute. I mean, it again, but that's what happens when you're trying to get the funds out there in the hands of people and sort of write the rules after the fact. So obviously none of us are political pundits, and we don't want to get into necessarily the politics. But again, I like to not only think short term, but long term. So if no matter who's in charge or what's going on, I start to think long term. Well, it's great. We got to get this money in the hands of small businesses and individuals out there to get the economy where it needs to be. But in the long run, how do you pay for all these things? Where are we going with that? Any thoughts there, Cindy, as to?
Yeah, and I think that's where the presidential election campaign is going to have to start addressing those issues because, we have really, really good tax rates right now. I can honestly say that, I've been practicing for 45 years and I've seen the 70% rate. I've seen the 50% rate, and I haven't seen these low rates. I mean, we are blessed, and taking advantage of these low rates is good. But how long can it last? I don't know, because we want to make sure that we can, the government's not going into bankruptcy or default on a lot of things. So I think the campaign will probably address some of these issues. I just hope they're not neutral on them, where they're trying to avoid the issue. I'm not even so sure the government knows the overall impact of what has happened under the CARES Act and the PPP loans. I think that everything was so reactionary that they didn't have time to think about it.
Yeah.
So I think that I foresee rates going up, but that doesn't mean it'll happen, because not only federal rates, I mean, I think states and local governments are also feeling the impact of what's been going on. So, how else do you get to pay for all the, things that they're doing without raising taxes?
Yeah. And that's a great point you make about state and local as well. For example, obviously in Ohio, we have a balanced budget amendment. So the budget has to be balanced. They cannot operate at a deficit. And today I saw that they updated the deficit projection at well north of $800 billion.
Wow.
$800 million. I'm sorry. I don't want to misstate that, but still it's quite significant. And in some fashion or another, the state government has to find revenues to balance that budget or cut expenses or some balance thereof. So, I think it's of utmost importance that we all think about those things too. And to some degree, it's, beyond the scope of this conversation to certainly to figure it out, but we want folks to be aware, because what happens related to that, we've always been in this mode of, well, defer taxes, right? Well, Cindy, that may not be the right answer now, because rates might be as good as they're ever going to be, correct?
Yeah, and that's where, when you do even individual tax planning, Doug, you're thinking, wait a minute, should I not maybe take, do some Roth conversions now while the rates are low? And with people inheriting IRAs, they eliminated the stretch IRA provisions at the individual level. So a business owner whose parents, is leaving only the IRA as a legacy, some of those retirement plans are fairly large.
Yeah.
And giving a business owner who's doing very well and an inherited IRA they have to take out over 10 years. I mean, increasing their income by $100,000 will reduce the $199A deduction and perhaps put them in a position where they can't do a lot of things for their own planning. So I think overall we do have to look at, the taking advantage of the current rate situation. And I have to honestly push the idea that, when you're doing business tax planning, you have to involve your individual tax planning. You can't just see one without the other. So that's where professionals come into play, and they look at the total picture, and they just don't look at business tax planning outside of the individual tax planning, because our business owners are small business owners that pass through to their individual return.
Yeah, that's absolutely great insight. I think the key there is have that holistic view, not only from your business perspective, but the personal perspective. Get your advisors together, get those folks that have a stake in your financial future together. And, that's what we're here for, is to have those conversations.
And to look past the present day, what can you inherit? What will you inherit? This is something that will impact. And that's why multiple year planning is more important right now than just looking at the present moment.
Yeah, absolutely. I wholeheartedly agree. Well, thank you, Cindy. This has been wonderful as always, and enjoyed the conversation, and look forward to having you on again. In the meantime, if you want more business tips and insight, or to hear previous episodes of Unsuitable, visit our podcast page at www.raycpa.com/podcast. And while you're there, sign up for exclusive content and show notes. Thanks for listening to this week's show. Be sure to subscribe to Unsuitable on Apple Podcasts, Google Podcasts, or wherever you're listening to us right now, including YouTube. I'm Doug Hauser. Join us next week for another Unsuitable interview from an industry professional.